the company, how would you get started?
Okay. Well, first, thank you so much, Eli, for presenting this case to me. And with regards to our client, Happy Mart, um, I have a few clarifying questions, but first, I just want to kind of walk through my notes just to make sure we're on the same page. So our client is Happy Mart, a convenience store chain in Thailand, predominantly in urban areas. So they've been in business for over 20 years and have built over 300 stores and have experienced steady growth, and have gotten to a point where they have a strong market share in their location, or specified locations. But the problem we're dealing with today is a decrease in revenue and a decrease in profit. So we're looking to figure out what strategies we can implement to kind of turn things around. Is that correct?
Exactly. I'd say that's a fair assessment and recap.
Okay, perfect. And so my first question is, in terms of getting this turnaround, are we trying to kind of break even by the end of this year? Or like, what's the metric of success for turning things around?
Yeah, so the case doesn't tell us exactly what their profitability is now. So we would definitely want to reverse the direction. So all we know that it's declining, and we know that the key metric of success would be turning around the direction. Okay, so we don't know exactly at this stage, are they profitable, are they not, do they need to break even? But we do know that the profitability trend line is negative, and success would be to turn that the other direction.
Okay, all right. So we need some sort of intervention to get us back to an increasing revenue, increasing profit.
Yeah.
Okay.
And what other clarifying questions do you have?
Do you have the exact market share percentage for Happy Mart?
Yeah, so we have a bit of information on their market share, which we'll get to in just a second. But you can assume that I'll give you some broad brushstrokes just to get you started. You can assume that they are strongest in Bangkok, where they have a 10% approximate market share. Bangkok being the capital city of Thailand. And you can assume that their market share in the rest of the country, so ex-Bangkok, is going to be negligible right now.
Okay, gotcha. All right. And of the 300 stores, what percentage of them are located in Bangkok?
So you can assume, that's a good question. You can assume that for the sake of argument that 100% of them are located in Bangkok right now.
Okay, okay. Right. Let's see. And so you said this is a convenience store chain, so kind of like low mid market is kind of the population that we're targeting.
Yeah, yeah. You can assume that customers want they want cheap prices, so they're price sensitive, but they also require a nice, bright, clean premises and a wide assortment of products in convenient locations.
And what products do they sell at the convenience store?
So you can imagine, I would say, to give you a benchmark that might be closer to home, you can imagine kind of a product assortment like a 7-Eleven that you would see
Oh,
kind of in the United States.
okay, gotcha. Okay, awesome. Thank you so much for answering my questions. I'm just going to take 1 to 2 minutes, no more than two, to sort of structure my thoughts and figure out what the best approach should be.
Great, sounds good. Take your time.
Okay, thanks so much. All right. So I've taken some time to flesh out my thoughts a little bit. And I'm gonna walk you through kind of what I'm thinking about, and maybe we can decide on a direction to go in.
Great. Let's hear what you got.
All right. So in the past 20 years, Happy Mart has seen steady growth, but now we're dealing with this decrease in profitability. So first, I want to look at why revenue has been decreasing. In terms of number of products are we selling less than usual? And then in terms of how much the products cost, are they priced kind of lower in the market? We're trying to understand the pricing schematic for those. And then not only is revenue decreasing, but you said profit is decreasing. So I want to understand and maybe do a cost analysis. So maybe costs have gone up over the years due to inflation or additional expenditures required for variable costs. So maybe maintenance requires a little bit more support, maybe personnel, there's a lot of turnover, or maybe the compensation structure is something to look at with respect to the personnel. And so after looking at revenue and then profit, then I think it would be important to do a market or industry analysis. So first looking at competitors. So was there a 7-Eleven substitute that came into the market that kind of disrupted things for Happy Mart? And then just overall the market landscape with respect to the population of the consumers, kind of like how has that population changed over the past 20 years? Are they still looking for this price sensible, wide assortment sort of establishment, or has the population grown to desire something else? And so I think it'd be important to understand what the end consumer goals and needs are as well. Does any of this stand out to you, or do you want to discuss any in particular?
So I just want to make sure that we're on the same page here. So I have three buckets. I'm hearing the first one is looking into why revenue is declining, which you would divide into basically price and quantity, or price and product. Then the second one is completing the profitability analysis by looking at the other side of the profitability equation, which is to say cost, external factors such as inflation, but also internal factors such as variable costs or expenses, operational expenses. And then the third bucket would be market/industry analysis, which then you've broken down into competitors and consumer trends, essentially.
Yes.
Okay. Which do you
Hello? Oh, okay. I thought it was just me. I am. It's not. It's not just you. Yeah. Sorry,
Looks
everyone.
like Eli is having,
Difficulties.
yeah. Thanks for bearing with us. Looks like we're having a little bit of tech difficulties with Eli. We'll give him a second to reconnect. Slight intermission for grabbing a glass of water. That's right, Charles. Pre-prep time.
Sorry, guys, my Zoom actually crashed. Can you hear me now?
You're back. Charles, it looks like you're a little laggy. We can now.
Okay. How's that?
Yeah. Yes.
Okay, cool. It's telling me that my internet connection is unstable, which of course is not ideal. I will move to another room. If it gets bad, just let me know and I can move to closer to the actual signal.
Sounds good. For now, it's coming through.
Okay, cool. Just raise your hand or shout if it's not. Cool. So Love, I think we were talking about the buckets of your structure and where you would probably want to look at first.
So since we've been experiencing steady growth over the past 20 years, um, perhaps I think my hypothesis initially could be that we've seen revenue growth, but perhaps costs have increased. So I would like to look at costs and see if there are any trends in that.
Okay. Okay. So I think
Um, it's lagging again.
Happy holidays, everyone. A little bit of a Friday tech difficulties.
Yeah, I'm gonna actually move to my living room and see if that makes it, if that gets
That
us,
sounds good. And if
that
you
gets us
think it would
moving.
help to kind of go off camera to help your connection, I feel like that sometimes helps.
Yeah,
What
maybe
are
I'll.
your what are your plans for the break, Japheth? Hi, I'm Pradyum.
Hi, bedroom for the holiday break.
Yeah,
I'm hanging out with family, so
sounds
just
fun. Sounds fun. Where
taking
are
it
you based
easy.
out of?
I'm in Birmingham, Alabama, right? But right now I'm traveling. Yeah, I'm in Northern California seeing family.
Awesome. Sounds good. Sounds good. I'm in Kelly doing my master's, and it's freezing here. So how is the weather there?
I can imagine. It's not too bad. It was chilly this morning, but we're managing. The sun's out, so beautiful California winter. So
Sounds good.
hopefully you get to have some go to some warmer climates
For sure.
over the break.
For sure.
Eli, whenever
Okay,
you're ready,
I
just
have I
jump
have
back in.
I have resituated myself in the living room, and hopefully I will have a better chance of success. I'm also going to keep my camera off for now. So
All right.
cool. Apologies for that. Love, thank you for your patience.
Problem?
So let's start with the market overview for Happy Mart. And what I'm going to do is I'm going to share with you an exhibit that we got from the Chief Strategy Officer of Happy Mart, and she shared this market data with us. And I'd like for you to take a minute or two, look at the chart, and share the insights that you are able to glean from this chart with me. Okay, so I'm going to share this with you now, and feel free to take some time to look over it, and then get back to me in a minute or two with kind of your key insights or takeaways from the chart.
Okay. So I'll just take 2 minutes to read the chart and then analyze it. right. Eli, are you there?
I am here. Let's hear what you got. Yeah.
Cool. So yeah, just like you said, Happy Mart has a 10% of market share in Bangkok and negligible market share outside of Bangkok.
Mm-hmm.
I was wondering if you could clarify the numbers at the top of the graph, the 500 and 1,000.
Mm-hmm.
They,
Go ahead.
yeah, I'm wondering if they represent so of like if we took $500, Happy Mart would only be able to claim 10% of that.
So here, this is the total industry revenue. So you can assume that 500 million is, there's no million on the chart, but 500 million USD is the total revenue for this industry in Bangkok.
Okay, gotcha.
And the net profit is 75 million.
Okay.
Yeah. Okay. Same thing on the right. So outside of Bangkok, let's assume that this is a billion, and that the net profit there is 100 million.
Okay. So the trend I'm seeing, it's kind of glaring at me, is that while Happy Mart is also a convenience store brand, the other convenience stores comprise of at least half or take up at least half of the market share, whether it's in Bangkok or outside of Bangkok. And so I'm wondering if you have any information on how many other competitive convenience stores are represented by this graph.
So we don't have the exact numbers, but I think you're definitely on the right track. And I think what we're trying to do here is sort of identify the trends or the themes that are emerging between both Happy Mart and competitors in Bangkok versus ex-Bangkok, without maybe knowing exactly how many outlets there are.
Okay. And so in terms of consumers looking for price sensible, clean, wide assortment products, is it safe to say that pharmacies, hypermarts, all these other stores are active competitors for Happy Mart or of Happy Mart?
Yes. Mm-hmm.
Okay, gotcha. So in terms of speaking only about Bangkok, the well, I think I'm seeing like the trend between both, kind of that what the competitors. Let me just take one more minute. Let's see. So it looks like the other convenience stores kind of dominate outside of Bangkok, not allowing Happy Mart to kind of disrupt that market. So one of my hypotheses is that perhaps any efforts outside of Bangkok might just be losing money. So focusing on Bangkok would be ideal in this situation. The growth rate is smaller than outside of Bangkok, but the market share is only evident in the Bangkok region for Happy Mart.
So let's go a bit further on that. So what can you tell us about the profitability of the different geographies from the data that we have in this chart?
From the data that we have in this chart, the net profit for ex Bangkok is $100 million over $1,000 million.
You don't worry about the zeros. You can just do the math with the zeros that are here, because percentage wise it'll be the same. So you can save yourself the zero headache.
Okay, thanks. So about 10% of or net profit margin is about 10% for outside of Bangkok. And then for within Bangkok, we have about 15% for, sorry, 15% period. In terms of profit margin for Bangkok. So it's more profitable to engage in the Bangkok market. And like it would make sense why all of Happy Mart's convenience stores are located there.
Right. So if you were to summarize kind of the key messages of what we've discussed so far in this chart, what would be the kind of 3 key takeaways that you would want to share back with the Chief Strategy Officer of Happy Mart who gave us this data?
So this chart is communicating that there isn't much of a presence or opportunity for Happy Mart to engage outside of Bangkok because they have a negligible market share in other regions of Thailand. Even though the growth rate for ex-Bangkok is higher than that of Bangkok, the profitability in terms of the profit margin is higher in Bangkok. So Happy Mart definitely has an opportunity to kind of deepen their influence on the market in Bangkok.
Okay. So the Chief Strategy Officer came back to us and she basically said that the problem with Bangkok is that it's saturated. It's saturated and as we saw in the chart, it's highly fragmented. So we're not really, it's very unlikely that we will be able to find the opportunities we need in Bangkok to be able to as they say, move the needle, right? So if you fast forward the tape a few months, discussions have progressed to discussing Happy Mart's expansion strategy outside of Bangkok, okay? And the Happy Mart executive team has identified Phuket as the next city for Happy Mart to expand. And they've shared some store level data with us, okay? So fast forward, we know that Bangkok is saturated. And as you correctly mentioned, it is more profitable if you look at the margins, but in terms of saturation, it's also highly saturated and therefore we need to look elsewhere. So I'm going to share with you another exhibit, okay? And what I'd like for you to do now is to share with me the insights that you can gather from the following exhibit that is regarding the opportunity of opening a store in Phuket. Okay, so that's coming up right now. And you're welcome to take a minute or two to look at this. You're welcome to write down any numbers and let me know how you wish to proceed.
So I'll just take another 2 minutes to read and jot down some notes.
Go right ahead. That sounds great.
Can you please define footfall?
So footfall is basically the number of people coming through the door.
Okay. Thank you so much. And the average transaction value per customer is $2 per visit.
That's correct. $2 per customer per visit.
Okay. Okay, wonderful. Okay. So given this exhibit, I'm looking at two things, kind of like the fixed costs and then the variable costs. So in terms of the fixed cost to open a new store in Phuket, is that correct? Okay, to open a new store in Phuket, that's gonna be about $500,000, which is 500 square feet per year times 1,000 square feet. And so for per store, it will cost at least $500,000. So we are at a, or that's the cost to open the new store. And so I think next I want to look at the variable costs, which are based on the revenue, so that we can calculate revenue. Given that average transaction value per customer is $2 per visit, and we get per customer, I'm going to multiply this $2 by 1,000 or 100,000 per month. Do we have any data on how many visits the average customer makes in a month?
So for convenience stores, they do not track individual customers. There's no loyalty program and there's no way of knowing who is visiting, and a lot of the transactions are cash based. So you can assume that each visit is a unique customer, even if it's the same person, because there's no way, they don't have any way of knowing. You know, you could come in and buy a coffee in the morning, and then the next day you could come in and buy a donut, but they don't know that it's love. You know, they just know that someone else came in.
Okay, gotcha. So let's see. So we have $2 per visit per customer. And then I'll multiply that by 100,000 customers per month. And we want to look at the yearly cost, correct? So then I'll multiply that by 12 months in 1 year to get the annual cost. So then that will give me 2 times 100,000 is 200,000 times 12 is going to be 20. So about $2.4 million is our annual variable cost. Oh, wait. Sorry, is our revenue for the year?
So you're very close. There's one important assumption that I think you may be missing, which is that 100,000 number is the estimate for Bangkok. So the 100,000.
Oh, okay. So 10% of that would be
50% of that.
50%.
So you can just do a
So divide
50%
by
haircut on the number that you just
so
got.
1.2 million.
Exactly.
Would
So
be the revenue.
1.2 million would be our projected revenue per year from the store in Phuket.
Okay, so then our fixed cost is 500,000. So that's minus 1.2 million in revenue minus 0.5 million for our fixed costs. Then we have our variable cost, which is half of the revenue. So that's about 0.6 million. So we're subtracting that from 1.2 as well. And so I know that $500,000 or 500,000 and 600,000 make about like 1.1 million. So subtracting that from 1.2, we're getting 0.1 million or 100. thousand
100,000.
dollars. So our net profit is going to be $100,000 if we open up one store in Phuket.
And how about our margin? What is our margin looking like on this store? Because what they'll be curious to know is how it compares to our current margins.
So our current margins in Bangkok are 15%, and our current margins outside of Bangkok are 10%. So if we take our net profit, which is $100,000, divide that by 1.2 million. We get, which is 1/12. Sorry, I didn't say that out loud. But that's going to be a little less than 10%. So we are looking at.
Can you get a little bit closer? Can you get a little bit closer for me? Not closer to the microphone, closer to the number. It will. You are correct. It will be less than 10%. That is, as we would say at McKinsey, directionally correct. But can you get closer to the exact answer for me, please?
Of course I can. I would be honored and delighted to. So that will be about 9%. You want to be exact?
That's pretty close. I think that's close enough. It would be the correct answer is 8.3, because we're looking at, as you correctly pointed out, $100,000 for the store in Phuket as the profit, and and the total revenue on a total revenue of 1.2 million.
Okay, so we're looking at 8.3% as our profit margin for opening one store in 1 year in Phuket.
Correct.
Okay, that is lower than the profit margin we would expect outside of Bangkok.
It is. So what can you imply? What would you advise the management team on now that you have some of these numbers? What would be your guidance after performing this analysis?
So we started with 20 years of steady growth for Happy Mart, but with a strong market share in Bangkok. But we've been seeing a decrease in revenue and decrease in profit. So based on the analysis that I performed, we have found that there is a 15%, or the profit margin is 15% in Bangkok and 10% outside of Bangkok. So it would it would seem like Bangkok would be the way to go, but because the market is highly saturated and highly fragmented, we're thinking about exploring, or it would be wise to explore outside of Bangkok. So Phuket was mentioned, and we did an analysis of costs and revenue to get the profitability of opening a store in Phuket. The profit margin is less than what we would expect at about 8.3%. So in order to kind of turn things around to go from declining profit or declining profitability to a climb in profitability, I would look into the possibility of expansion in terms of mergers and acquisitions. So maybe partnering with the other convenience stores and kind of creating a synergistic relationship such that we can use what's already available in the market to drive our revenue growth. So looking at the top performing convenience stores and seeing if we can acquire those or merge with them, I think would be a good strategy.
Okay, great. Cool. Well, thank you for that, Love. And that brings us to the conclusion of the case today. So very good job. It's always difficult to do under pressure, and especially with an audience of 100 people, which will not be the case in real life. So very well done. Before we debrief though, go ahead.
Sorry, I just wanted to add
Go ahead.
very quickly. One of the risks of doing this could be brand perception might be affected if we're working with another and like another enterprise. So it would be important to make sure that the company that if we do merge or acquire, that it aligns with our brand.
Very good. Noted. Thank you. Cool. So how did that feel?
I am incredibly sweaty, but I feel challenged in a way that I haven't necessarily been in my case prep experience. The numbers were okay. I think kind of the open-endedness was a little stressful. But yeah, thank you so much for your time. Thank you for working this case.
You're welcome. So what I'd like to do is I'd like to go through the different parts of the case, and I'll let you decide. Do you want to go beginning to end, or should we start at the end where we just were and work our way backwards? What would be most helpful for you in terms of processing the feedback?
Beginning to end, please. Beginning to end.
Okay. So the beginning, as you know, and as everyone knows, is all about structuring. Okay, and this is where you want to make sure that you have your 3 to 4 level 1 buckets, your level 2 buckets, and that you give some examples on level 3. So here, I think your buckets were revenue, cost / profitability, and then market / industry analysis. What I would have done here, and I would say what you did was pretty close. What I would have done here, how I would have bucketed this, is some version of the 3 C's framework, right? So company, customers, and competition. Because I think that your revenue and cost and profitability buckets can actually all be merged into a bucket that you could call financials, or company financials, if you will. And that's where then you have your revenue and cost categories under there. Your competitive questions could then be, as you correctly said, who are the major competitors? One thing you didn't mention, what have they been doing recently? Are there any moves planned? And then how are we different from competition? Or is it completely homogenous? Are we separated? Do we have some sort of elements of distinctiveness, and what are they? Is it customer service? Is it location? Is it whatever? And then on the third bucket, customer, really understanding who are our customers, what do they value most when they decide which store they're going to visit, and are there any other segments that we're not currently targeting that we could attack? An optional area to investigate, which you could include from the beginning, is this whole idea of growth, which I think you started to talk about more when we got to the end, but you are welcome to have a separate bucket that is, growth or mergers and acquisitions, which is, can we look at merging or acquiring, attractive targets in this space, or whatever the case may be, right? So kind of a 3, possibly 4 bucket structure, pretty close to what you have, but I would have included revenue and costs under the same bucket of company financials, and then have competitors and consumers in their own little buckets. Cool.
Thank you so much.
On the second part, which was around the fragmentation and the breakdown, I think here sort of the big takeaway, and you got most of them, was basically about Bangkok being fragmented and saturated, us not having any presence outside of Bangkok, and also the fact that the margins were different in both places. So I think you did a good job there. I think my major comment on the part that immediately followed that, which was about the kind of basically what you were doing was calculating the P&L of a Phuket store for a year. The part that was really the most important part there to realize was that this 8.3 or 9% margin that they could expect in Phuket is going to be margin dilutive, meaning they're used to a much higher margin than that. And so the question here really becomes to the CEO, are you trying to grow your revenue and profit in dollar amount? Or are you trying to increase your margin or maintain your margin and your profitability in terms of percent? And this was an important nuance that we didn't quite get to. But this is, I think, for me, the margin dilution point is, I think, the key thing that separates a very good performance, which is what you gave with maybe a distinctive performance, is having that element of margin dilution there and saying, hey, you need to think about your priorities, Happy Mark, because if you're just looking for growth, you have to get out of Bangkok, but you need to know it's going to cost you margin, even though it's going to be adding to your revenue and your profit overall. So I think that would be the big thing there. And then I think on the final question where I asked you to synthesize your recommendation for the top team, there you're welcome to ask for time, by the way. And I think you should feel free to ask for time at any point in the case, including the very end, to gather your thoughts. And then you take, maybe 45 seconds to a minute. And then when you come back to it, you try to be a bit more brief, a bit more succinct in terms of, top down, these are the 3 points, these are the risks, and that's it, right? So those would be my key feedback points. I think you did a great job throughout and a great job on the math as well. So any questions for me before we wrap up? I know you have a hard stop in 2 minutes, so I want to make sure that we let you go before you need to go.
My biggest question has to do with the exhibits. Is it better to take time and kind of give the high level big picture, or take time and then go through like each major insight?
I always say big picture and then deep dive where necessary, right? Always always communicate top down. This is the key message. These are the 3 supporting points for that. And then you can go into elements that the interviewer said, oh, great, tell me more about this. And then you can go into a bit more of a story on that.
Okay, thank you so much.
Cool. Thank you, love. Great job again. And I know you have to run, but I am happy to stay on if there are folks who want to discuss any additional questions, even if after love drops. So
Wonderful. Thank you both. Love, you're free to go if you need to run. But yeah, like Eli mentioned, we'll kind of stay on for a few more minutes due to the technical difficulties, so we can kind of answer some questions. So if you need to run, please do. But if you got a few minutes to stay on, we would love to have you. So go ahead and just pop your question in the chat or raise your Zoom hand, and we'll get to you. Rajit, I see that you have a question. Go for it.
Yeah, perfect. Thank you. Thanks again, guys, for this case run through. I really appreciated it. And Eli, my question mainly was with regards to the final recommendation that you had, where you mentioned that there would be margin dilution because you're at 8.3%. Isn't the original task at hand from what the company wanted was to turn around the profitability? So if we were reducing or diluting the margin or diluting the profitability in this case, wouldn't that basically further bring the curve down, so to speak, when you're looking at it in a percentage point of view? And wouldn't that be just going against what the CEO of the company would want?
So great question, and this is a very nuanced question. So I want to go back to the original prompt, which basically says that they have been experiencing declining revenue and profit. Okay, so then it says that the CEO has asked for help in defining a turnaround strategy. Okay, so revenue and profit, right now we're thinking dollars. we're thinking money, we're thinking we need more money in the bank, right? And a turnaround strategy doesn't necessarily mean that we're only going to pursue, margin preserving activities. And I think part of the final recommendation is saying, hey, you are in a market, which is Thailand, where you enjoy a very high margin in the capital city, but you're maxed out. If you actually need to improve your overall financial health, you are going to have to expand outside of Bangkok, but that is going to come at a cost. The cost is going to be that you are going to have to operate at lower margins of profitability than what you're used to operating at. But in the long run, that's the only way to save the company.
In addition to this, if you look at the exhibit with the graph that you mentioned, outside of Bangkok, profitability was around 10%, and this is clearly lower. So wouldn't Phuket be the wrong choice? Because if you want to stay within that 10% margin, at least, you want to be ideally between 10 and 15, but you're at 8.3. So in terms of a recommendation, how can you still justify that?
So great point. So I think what you would say is the data that we have, the detailed data that we have is only for Phuket. We would probably want to look at other test markets to decide what is the right market for us. We know that directionally we're going to have to get used to accepting less margin. Maybe not 8.3, right? Maybe Phuket is too low, but hopefully we can find some markets in maybe, the mid-tier cities that are less touristic or whatever the case may be, that would be still margin dilutive, but would be better than 10% or around 10%, which is the benchmark. Okay. So yes.
Thank you.
Love it. All right, Charles, I see your hand is up next.
Oh, thank you. Thank you, Joseph. And first of all, thank you so much, Eli, for giving us your insight. Are you guys able to hear me? Okay, yep. Perfect. Yeah, I have a question in regards to delivering the final synthesis. So with the recommendations, I would normally give the recommendation directly. So in this case, I'm looking for maybe a standardized or a more preferable recommendation. So we will give our conclusion first, recommend Happy Mart to expand into external market, and then follow up with 3 points. And what would be the 3 reasons? From our analysis, we understand we will get a slightly diluted margin, but it would still help the company to achieve higher profitability. What would be the other 2 reasons to support that?
So let me walk you through what that looks like. So I think you hit the nail on the head with the recommendation. The first thing that you would say is, dear CEO, sir or madam, our recommendation is that in order to reverse the financial decline of your business, Happy Mart needs to expand its operations outside of Bangkok. Okay? That is the highest level recommendation. Then you go into the supporting points from that, and you basically say that based on the sample that we did in Phuket, the test that we looked at in Phuket, there will be a revenue and profit upside. Okay, it's important to distinguish between profit and profitability. Profitability is a percentage and profit is a number. Okay, so there will be a revenue and profit upside from expanding to stores outside, in the example of Phuket. And the store that we looked at estimated generating a profit of $100,000 a year with an annual margin of 8.3. And dear CEO, you might hear the number 8.3 and be surprised because that's much lower than what you're used to. And that is a risk of this strategy, is that you will experience margin dilution when you expand into areas outside of Bangkok because they're simply less profitable margin-wise, okay? Now, it is possible, as Rajit was saying, that we might be able to find more profitable markets outside of Bangkok, but we know from looking at the market outside of Bangkok as a whole, that benchmark is 10%, okay? So being comfortable with a lower margin is something that we're going to have to get used to, okay? And then the other thing that you would want to say is, in terms of next steps, we would suggest looking for ways to optimize your fixed costs in the locations that we're looking at so that we can increase the unit economics, okay? And we would also immediately want to expand our horizons and look at other markets other than Phuket. So not Bangkok, we know, but also maybe not Phuket. So we need to identify what those ex-Bangkok markets would be that could be attractive.
Gotcha. Thank you so much. And would you also, just a quick follow-up, would you also always follow up with an additional area for further analysis, just like you mentioned? We're going to look into fixed costs to produce more work. So with that helping our interview to always include a further analysis if we have more time to go after?
Yes, I mean, I think the sort of cynical approach would be to suggest it to produce more work. But I think the reality is that when you're doing these cases, you will only be given one very small piece of the puzzle to work with. And so I think it's important to say, hey, we looked at Phuket and we got the P&L for Phuket, but we also need to look at, could we reduce our fixed costs to improve the unit economics? Can we look at other geographies other than Phuket, et cetera? So I think it's important to show your awareness of the whole problem and where the analysis would need to go next.
Gotcha. That was very helpful. Thank you.
You're welcome.
Amazing. Eli, how much time do you have?
I'm fine to take a couple more questions. I see James and Diana both have their hands up, so happy to take both of those.
Cool. All right, we'll do James and Diana. All right, James, go ahead.
Hi, I'm Jim Kukis, joining from Boston College. Thank you both so much for kind of just doing this. It's been really helpful. Kind of seeing a case unfold firsthand. My question kind of goes back to the idea of expansion. So obviously with the lower profit margins, it might kind of be a long run game to pay up or like kind of get the cash to pay for the properties that we're going to be buying. And I was wondering, since we're finding decreasing profitability in Bangkok, if it would make sense to bring up in the case interview, how would we finance an expansion? Because I was thinking maybe selling off stores in Bangkok or like trying to find cheaper properties. I saw that the mom and pop stores had a larger share of the market in the other location. So I was kind of thinking if it would make sense to bring up how we would go about expansion in the interview, or if that's not really a necessary detail.
Look, I don't think it is a must, but I think it's a nice to have. So I think if you have the time and you have the bandwidth to get to some of those considerations, I think it's always good to mention any important business consideration that you can, right? And in the case of Happy Mart, we know that they're not in a great financial position, right? Otherwise, they wouldn't have called us, right? So to your point, this may not be the best time for them to be spending cash that they don't have to expand into geographies that have lower margins than what they're used to, right? So I think it's important to bring it up. I think this ticks the box of what I would call, what is called conceptual thinking, right? So when you're doing these interviews, all of the MBB firms are really testing for three things. They're testing for your ability to structure problems, which they call analytical thinking. They're testing your fluency with numbers, which is quantitative thinking. And then they're assessing your creative thinking, which is also referred to as conceptual, right? So these are the three areas that will be tested. And the things that you're describing are things that for me fall into the conceptual thinking bucket. And if the more of those types of ideas you can generate in the interview, even if you don't go into them in detail, the more it shows a spike in conceptual thinking or conceptual problem solving. So I think it's important to bring up as many of those elements as you can, but I would just caution you not to dwell on them. Mention it, move on.
Okay, so of those kind of three areas that you talked about, like kind of creative problem solving or like creative thinking would probably be at the bottom of those three. Is the least important to maybe try to showcase?
They're all equally important. You have to showcase all three. So I would
Okay.
not put them in a hierarchy. And I think conceptual creative thinking is very important. So as you have those ideas come up, if it comes up that it's not the right time in the case to kind of say it, make a little note and bring it up at the end or something like that. These things typically come in two places. So in this case that we just did, there were two places for those types of observations. The first place was when I showed the market breakdown chart that showed the fragmentation of the different of the industry at Bangkok versus outside. That was one place for the creative sort of conceptual thinking observations. And then the last place is your final recommendation, right? So jot it down at the end of your notes, and if you haven't had a chance to talk about it, you can slip it in the final recommendation and kind of other things to consider or important considerations.
All right, thank you so much.
Yeah, you're welcome.
Thanks for the question, James. Appreciate you being on. All right. We'll do one more, and if we weren't able to get to your question today, please reach out to our team. You can just email us, team@managementconsultant.com, and we'll do our best to connect you with the right person to answer that. But Diana, go ahead and unmute yourself and ask your question.
Yeah, thank you for being here. I just have a question regarding how to close the hypothesis, because at the first part you said, like, I have this kind of hypothesis, seeing that the cost is increasing or something like that, and then at the recommendation we have to like refer to that first part because we're starting with that, or not, or it's not something that we have to do.
So let me make sure I understand your question before I attempt to answer it. So your question is basically, do you need to refer to the original prompt in your final synthesis?
Yeah, not the original prompt, but for example, in this case, she said after presenting the framework, so my hypothesis is like the company is increasing the cost or decreasing revenues. So at the end, we have to close referring with something about our first assumption or not?
So ideally, the more you can tie everything together, the better. I think when you are making your final recommendation to the CEO or to whoever the client is, I would say it's best if you can actually tie it to the original prompt as much as you can, and not to your original hypothesis after you created a structure. Because the risk of doing that is that you created that structure and came up with that hypothesis with not very much information. You're much better off and safer if you can actually refer to the original prompt. So in this case, the original prompt very clearly said that revenue and profit are declining and we need a turnaround strategy. Okay, so you can go back to that in the end by saying, we know that getting out of Bangkok will help you improve your revenue and your profit. Now, where it's not going to help you is your profitability margin, your profit margin. And that's the sensitivity, that's the risk. That's why we may want to look at places that are not Phuket, etc. So the safest bet will always be, and this is actually true in real consulting, not just interviews, always try to tie it back to what the client actually told you and not what you thought the client was telling you. So the more accurately you can catch the prompt, the more it will help you later, because as the case goes on, new details will emerge that you didn't even know you would need. And then when you can refer back to the beginning and you see, they're concerned about revenue and profit and a turnaround strategy, it didn't say anything about margin or maintaining their margin. So now I know that their margin, I'm going to have to give them the bad news that in order to meet their goal, they're going to have to give up something else, which is in this case, their 15% margin or whatever it is. So always try to tie back to the beginning. Most candidates can't do that. Very few people actually do that because there's a really strong bias to interpret the case you've already made it something else just by listening to it and writing it down. It's like the game of broken telephone. As soon as you've told somebody else, it's already changed. So the more accurately you can keep the integrity of the prompt, the more it will help you at the very end of the case when giving your final recommendation. And actually, that's really what another element that separates good candidates from distinctive candidates.
Thank you.
You're welcome.
Thanks for your questions, everybody. And Eli, I really appreciate you staying on a little bit later. So we'll let everybody go now. We'll make sure you get the recording of this early next week. Again, really appreciate you. And don't forget to take advantage of the resources we mentioned at the top of the call. We'll email links out to all those as well. And work with Eli via one-on-one coaching. He'd love to hang out with you one-on-one and do this in a private, non-recorded way and be able to go a little deeper. So
Absolutely.
Thanks, Eli, and thanks
Looking
everyone for
forward to
joining.
it. Happy holidays, and thank you. Take care.
Yep. Happy holidays.
Bye-bye.
Bye all.